at the end, if you're not a part of the lead vendor and the organization and you want to know more, just text join the 352-255-2594 and we'll get connected. If this computer shuts down, because my area has been doing some work on cable and shit like that, if it shuts down, you can always go to my Facebook page where it's live and you can get on there to interact also. So as if you have any questions pertaining to final expense or mortgage protection or annuity sales, the industry, the leads, anything about anything that has to do with the industry, on here you can comment, on here you can open the mic up and just ask, or you can quote it, but I don't see the quotes all the time, so it's better just to ask the question on the mic. So let's get started. Today we're going to go over final expense mastery. This class has been designed every Saturday for the past 2 years. Every Saturday, I've not missed one in 2 years. If you don't get this video, or you want to share it, it'll also be on my YouTube page. But we're going to go over final expense, and for a lot of you not understanding, and a lot of you in mortgage protection, this is a way to master mortgage protection, is through final expense. So they both kind of work for each other. So in final expense, and listen guys, please, for this to be embedded into your head, take notes on this, write it down. Get this information real tight in your mind. Number one, what do we need? Well, you need a license first, right? But beyond that, you need the right platform. A lot of you don't understand platforms. You think that everywhere that you go, you're embedded with the right stuff through the person that sold you on the platform. And 9 times out of 10, it's not. When you're educated by people who've been at each and every individual platform, you get the wisdom of professionals, somebody that actually knows what these other locations are doing. And the number one thing that they're failing at is education to you. Education, and number 2, leads. Hey guys, when you're on this, make sure you mute your mic out, please. So you got education, you need the leads. Number 3, you need sales mentoring. 4, you need to learn how to move up, to get your income up. So to income boost, to get up to here from, let's say your first year, you're doing 50K to 100K. If you want to get to the 250K marker, you're gonna have to embed a lot more of these and a lot more of that. What is this? To me, this isn't always about this. It's not always about the sales. To me, this mentorship, this educational behalf, I'm gonna take that out and I'm gonna put product knowledge. And I'm going to go over that real quickly. Number 4, and there's number 5. We're just going to skip past this because I'll talk about it. So at the end of the day, what you're going to learn is you need the product knowledge and what are you using out there. The importance of what you're using in final expense will lead you to the sales. Foresters, when you're a final expense rep and you're using this product and others are using products like America or they're using AIG, they're just giving guaranteed issue across the board to anybody, because it's an easy sale. They don't make any money on the deal, but they get a sale out of it. They pay up 6 months of whatever your premiums are. But when you sell a Forester Smart UL to somebody, what are you able to do for them? Hey, you can lead them into the member benefits. So remember to study member benefits. I'm giving you right now what you should be studying. Learn the member benefits. I'm gonna put one big word on here. It's called value. And if you ever want to get bigger dollar signs, you want small dollar signs, stick to what you're doing. If you want larger dollar signs, you get the Smart UL down, you get the Foresters, and you get the other products I'm about to lead you into. You get the living benefits. The living benefits are so much value to a product because you're able to say, hey, Mrs. Jones, at the end of the day, I know this product is on Mr. Jones, because 9 times out of 10, you're going into a home, and sometimes the only affordability is one person these days. So if you're doing one product, why don't you sell one product that is advised to be for both? Now, here's how it works. If I'm gonna have to get rid of this, let me put number C here. This will be cash value interest earnings. So the interest that's compounding on their money while they're waiting for somebody to die or they're waiting for the living benefits to kick in. somebody's getting paid in this house, whether they're alive or dead. And that's how you have to inform them, because nobody wants to know what the hell they're going to get when they're dead. If you inform them on what they're getting while they're alive, you have much better sales. You have better sales across the board, and it increases the premiums that you sell and the value of the product. So via the value of the product going up, the premiums go up. Trust me on this. I'll go over a few more products, but let's bring value to the table. So if I have Mr. Jones here at the table, and I have Mrs. Jones here, and I have me selling this product to them, I want to bring death benefit to him for her protection from the funeral cost. These are some items you can list down. Let them know. The funeral cost, cremation, taxes, rent, mortgage, kids, grandkids, car payments, healthcare, food. The list goes on and on. Here's a good one. Mrs. Jones, did you know when he passes away, if they're older, to receive his Social Security income, what will you be living on? I'll have $1,000 a month. Now, you guys told me your mortgage. Even in final expense, I try to find out how much their mortgage is so I can help them bring value to this and bring more money to the table on larger premiums. So hence, if I bring the mortgage into play and the mortgage is $1,200 a month, she only brings in $1,000, she's already $200 negative. Now, his Social Security is $2,500 a month. A lot of people think that that's instant. That's not. It can take 6 to 12 months before they receive the Social Security income. So there's a short void in time. I had a rep call me last night to ask me what to do in this scenario. And I told them this: you've got to buy them time. So if they're not interested in a lot of things, like this goes for mortgage protection too, the funeral gets covered, plus that time period, that void in time where she's going to have no money coming in due to the Social Security taking a while. This helps you sell. I'm telling you, this sales point of view is so huge in the home. It helps you increase the value of the premium, along with the fact, Mr. and Mrs. Jones, if Mr. Jones were to get cancer, heart attack, or stroke, remember, we're using a Forrester Smart UL. Cancer, heart attack, or stroke, or if he couldn't walk, bathe, eat, dress, toilet, transfer himself around, walking, or drive a vehicle, talking, that this $25,000 is yours while he's alive. Now, I bring up 25 because it's the minimum. A lot of times that, something like 15,000 or 20,000 or even 10,000 through a final expense product is all the face amount you can bring. With the UL, you can bring higher face amounts, living benefits, and cash value earnings of 4% to 6% interest annually. It's not over. They can also stop making payments halfway through. So yes, it's a UL, and I'm going to explain how to keep this in play. Yes, there's cost of insurance to it, but they can deflect this through this. They can pay more in due to the fact that they find interest in retirement. So if you find somebody fairly decent in age, younger, 50, 60, and they're looking for, they're paying their mortgage, they're looking for a funeral, for death benefit, they want living benefits, they didn't know living benefits come with it, now they know, and they can have a retirement schedule set aside too. Now this would be, who would that retirement be for? This is where the policy works for both of them. So the death benefit is for her. The living benefits are for both of them. And the cash value would be for him if she's dead. So see, everybody's protected on one product down the line. So you do the math, if they're paying $200, now in this product, you might have been selling a $50 or $100 policy, but now that they see value, their money growing, living benefits, they understand somebody's getting paid, they don't have a problem shoving more money at it. If you knew what was left over a month, that would help. So inside your presentation, if you're asking at the end of the month, just to protect both of you and understand what's going on now, I'm an advisor, so that's what I'm here for. Is I just would like to know, just for your safety, is there $500 above or below that do you have? At the end of the month, when all the bills are paid, do you have 500 bucks left over on average? Oh, we have more than that. So you have closer to $1,000, right? Well, maybe it's somewhere in between there, 750. But the openness to this is that this may not be exactly what's left over. 9 times out of 10, I just go like this and I say there is actually 500 bucks a month left over because they're probably still spending it on the streets, at the restaurants, things like that. But at the end of the month, there still is 1,000. They're just incorrectly using it. They're just blowing it because it's there. Now we have found a way for them to introduce money to a product that protects them, an investment for him, for his future, of which he can pull the cash value on a monthly basis. Okay? So that's a great product to use, and it has all this value. And it protects 2 people. It protects both of them when he's alive. It protects her when he's dead. And it protects him when she's gone. You can't lose. Every product should work that way, not just the Smart UL. Even a simple final expense product, let's say you're using Royal Neighbors. And I advise this for new reps because Royal Neighbors is a liberal product. I mean, they really get a lot of people through health issues. Learn the difference between the products. Well, that takes time. You know what I mean? You're going to fail throughout your career. And it's only due to the fact that you don't know the products. If you can learn the products, you'll make more money than you can ever imagine. It's just in the products that you're walking in his house, you're sitting down with Mr. and Mrs. Jones, and you're trying to advise them on something you are unaware of. You know that they want death benefit. You know that they have a rent. But what product do they use when they start going through the health questions? So what your go-to, it should be Foresters, Royal Neighbors, and AIG if you start there, if you're real and brand new. I'm not opposed to Mutual of Omaha has great products too, but I don't want to overflood you if you're new. So you're sitting there and you're trying to advise people on what the hell to do. And at the end of the day, you're wondering what product to use. So first, why don't you start with the Forester Smart UL and see if that matches, because you can beat out anybody and you're bringing living benefits. So they also have Plan Right too. So Forester's Plan Right is a great way to get coverage, but usually Royal Neighbors and Mutual of Omaha might beat the price. So it's a price thing. So if you would play around with your apps in your phone and start checking prices, I would advise this. Here, let me put this up. We'll go over this real quickly here. But if you were to take your apps in your phone and price it and pricing people out, and start messing around with that, and you start taking people 50. And then you got to have a barrier for like 5 years, you know, the price isn't going to change that much. And you start putting the average cost of final expense, $10,000 to $30,000 in, you'll get an idea what that price is in that category. Let's do 60 and 70-year-old and even go 80, and then you'll get a price check. And you have to do that for each carrier and kind of get an idea of what it looks like. Your brain will start remembering this over time. But that's why we want to limit how many carriers you walk into the home with. So using limited carriers helps you understand what you should be using. Guys, you can use just one carrier and sell final expense, but as a broker, you have more options. At the end of the day, you got Royal Neighbors, which is a liberal company. They allow a lot of people through their health. They got great member benefits too. So learn their member benefits. Learn the member benefits because, in Foresters, by the way, with the Smart UL, if somebody passes away, if the parents, if they orphan the children, each child gets $900 a month until age 18. That's huge. They get a death benefit plus $900 a month per head. That's just enormous. Along with 1% of the face amount goes to a charity of their choice. So they get to choose a charity of their choice. They get to leave money behind. 1% of the face amount. It's not too much money, but it's something, and it's not out of their pocket. So you got Royal Neighbors, Liberal Company. You want to learn how to use your apps in your phone to get the numbers out, and maybe you have an iPad too, where you're able to adjust the numbers frequently. You also want to, you want to fall back on AIG. So the AIG guaranteed issue pays you 6 months of advanced premium. So if you're selling $100, you're getting $600 out of the deal up front, but they still owe you for that residual income. So sell a lot of this and you get a large residual income. I was selling, before I had AIG, I was selling so much Gerber at one time that I was not only making a 6-figure income, but I was selling so much Gerber over the years that it turned into $2,000 a month in residual income, which ended up fantastic for me, right? So I thought it sucked to sell Gerber, but it was fantastic in residuals. So that's what will happen to you eventually, is that the overrides will start coming in on a regular basis. A lot of you reps, want to know about leads, and I want to fall back on this because this is where it all starts. And I want to explain the lead process because this is vital to your future. No platform has these leads, okay? So you're lucky to be a part of this. Why? Because we own 4 lead houses. We are the owner of the lead house. So are you. We just created the brick and mortar, but you have access to this. So what do you get access to? You get access to creating any demographics you want, which means you can choose ages, you can choose male, female, you could choose Chinese, you could choose black, white, you can choose Spanish speaking, you can choose hair color, for God's sakes. I'm just kidding with that one. But you can choose ages, household income, but these are already set up in a way where household income is $25,000 or $35,000 minimum and $75,000 top end, which means you're going into a final expense deal that has money and understands why you're there. You should have no problem setting the appointments at all. None. And in fact, I don't have final expense leads, but I do have a couple new leads for mortgage protection. If I'm in a mood, I might set them today for you, but let's continue with this anyway. 4 lead houses, you get to choose the demographics. You get to take zip codes out. So if you're having trouble and your leads are landing into a zip code that has bad numbers, just the numbers aren't working out for you, you take the zip codes out. So you can choose the zip codes, you get to choose by counties, and you're paying $22 a pop for most leads that cost $35 and $30 at most organizations. But your demographics, each lead is worth $100 average premium to $200. That's what you should get per set. Now the average in the industry is anywhere between $50 to $80. $80 is high. We're higher. We're $100 to $200 a pop, along with finding money. The importance of these leads is to walk you into a place that needs more than final expense, to broaden your horizons in what you're licensed to do. Because most of you only use your license for one thing, and that's to cover burial. But now you're into a home that allows you to cover the mortgage and rent and car payments. You have products now that allow you to do the same. So you have this final leads, also the B leads. All your leads, by the way, are A leads, and they are your leads. They never become B leads. We use an outside vendor for the B leads. So B leads and A leads mixed together. So if you're having trouble with the B leads, and you find a lot of people do this, they will purchase one batch of B leads and have a rough ride with it. And I tell people, listen, you might have a bad week, you might have a bad dial session, but you'll never have a bad month if you stay active. So activity is what makes money. Education makes money. You've got to do both. If you're active in this business, you will stay rich. If you lose activity and your mental attitude drops to the floor because you didn't set any appointments, no big deal. Just do another dial session. Think about your numbers when you're dialing. You have to think about a few things, and you should keep the records of this because I can help you. So if you buy your leads, how many did you purchase? Leads, how many were purchased? Weekly is what you need to do because we're in a monthly paid business. If you want to look at this business, you look at it from a monthly standpoint of view, and that's how you get rich. You guys all hurting out there saying, I got to get paid this week. I got to get paid this week. I understand, but you chose this industry. I'm speaking the truth. So if you have 4 weeks and this one's out, let's say the third week's out, you're guaranteed this week because the numbers never lie. You're always guaranteed sale. You don't think I've gone 10 in a row? I've gone 10 in a row. No. Or think about it. You know, and I'm great at what I do. So at the end of the day, when you get into these situations, you know, you can lose your head. Now, here's the special part of what I tell myself. I say it's so fantastic because now I know the numbers owe me. Now the numbers owe me. And that's what's so fantastic about it. Weekly lead orders. You have your dials. Question mark. How many did you make? You got 100 leads, okay, over time. You dial through 100. You set 5. See, these are older leads. These are B leads. This is just, I'm doing a real rough situation. You set 5, but you dialed 100 times. Remember, you dialed 100 times. If you dialed 200 times, you'd end up with 10. So activity, again, will provide you with the numbers you need. We're in a numbers game business. Learn how to dial. Learn your scripts. Hello, Mr. Jones. My name is Jason. You had requested some information on final expense. I'm the rep that handles that area. I'll be in your area tomorrow with that information, handling your area. Does 2 p.m. work for you and Mrs. Jones? That's it. That's the script. You don't need 4 pages of script to set these appointments. In fact, it takes too much time. You need to be boom, 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 on the phone, in and out in an hour. 2 days a week, possibly 3. And then if you get to a point where you learn this well because you're going to have to coach it one day, then you can delegate this work out. So you have your dials. How many talk tos did you have? How many people did you actually talk to when you were doing that? And that'll tell us a little something about what you're doing on the phone. So when you talk to, how many sets did you make? How many people did you set up to sit with? How many sits did you have? This will tell us if you're soliciting the script and you're soliciting the phone call. Mr. and Mrs. Jones, I'll be there at 2 p.m. Mr. Jones, can you please do me a favor? Can you pick up a pen and paper for me and write down and let your wife know that I'm Jason, coming for final expense. I'll be there on Tuesday at 2 p.m. Yes, I'll do that. Okay. I'll see you at 2 p.m. on Tuesday. Okay, Mr. Jones, you're going to tell your wife that, right? Yeah, sure. I'll take care of that. So again, what time did we say, Mr. Jones? 2 p.m. Okay, great. So I'm soliciting it up to 5 times. I know the guy's going to be there. He said it 5 times. I said it. He's got to be there. You know, it's just soliciting. So sits. How many sits did you have? And how many sales did you create from those sits? That started with the lead order, then went to the dials, went to the talk-tos, went to the sets, went to the sits, and then went to the sales. This is the process, guys. But up in here, there's also, what are you doing in between all this? Like when you're waiting to get there, are you studying your products? You know what one rich, very wealthy guy told me at 28 years of age who was doing $80,000 a week? 80 grand a week this kid's earning, and he's 28 years old. First place I ever worked. I'm not going to say his name, but at the end of the day, this kid's earning $80,000 a week. He's driving a Bentley. He's living in a $500,000 home. And he told me that he studied his products. He was smarter than the people in the room. He understood the competition, which is very important for you to run into the competition too. And when you do, one of your biggest money makers is replacing policies. It's one of the biggest things you can do is replace policies because they're junk, they're garbage. And you have to get good at that, and I'm going to go over that with you. You have sales, now you have what? You have referrals. You have to write the app. This business is no bullshit. You got to work, man, but you can have a good time. You're doing it because you like helping people, but you also love the money. You love the fact that you can pay $2,000, $3,000 per sit. And that's exactly what you should do. Because if you dial, look, I said there's 100 leads here, but if you sold 5 people at $100 to $200 minimum premium, what do you walk away with? You can easily have close to a $7,000 week. Or that could be a $7,000 day. Or it can be done in 2 days. And it should be done in 2 days, minimum. You should be setting anywhere between minimum 5, 10, 15, and 20 appointments. And people say, Jay, well, you set 15 and 20, you know you're not going to get to them all. I said, bullshit, I almost do get to them all. So I take 4 days a week to do that, divide that by 15, and that's how I get it. I said 4 a day, basically, you know. So I see 4 people a day. You could do that. Spread them out good. I give myself time in between because I know I'm talking. In my area, I got to sell, guys. There's nothing like Florida, nothing like the area I run. You got to sell these people. You have to present. You have to know their product. You have to know your product. You have to know what they could run into. And I'm going to remind me to review what people are going to run into so you know why they're purchasing this stuff. So you have your referrals or contacts. Some guy told us to say contacts. You have any contacts for me instead of referrals? If you pull out a gift card, let's say it's your gift card, and show it to them, and say, or have a stack of them, and say, right now I have a stack of gift cards, all worth $5 a pop. Now bring out a stack of them. If you pull out your cell phone, you probably have 100 people in there, Mrs. Jones. I'll give you $5 per person that sits with me. Here's 1, here's 2. We'll set the appointments right now. Let's talk to them right now. If you talk to people right now and they're willing to set up a sit because somebody led you to that, now you got free leads. You didn't pay a dime for it. Your lead cost comes down, putting more money in your pocket. There are reps out there in the world that do nothing but referrals. Nothing, and I know them. They do nothing but referrals. They started with leads, but they ended up with referrals. And they become a master at that, and they never spent a dime on leads. I spent $55,000 on leads last year. $55,000 on marketing my company. That's more than most people make in 2 years sometimes. That's a lot of cash, guys. But it takes that to make the money I do, okay? So I'm not afraid of it. In fact, I hope it hits 100 grand and I double my money that I made last year. So, or how about this? I hope it lessens and I double my money. And that would be for referral market. So, any questions so far? Anybody have any questions about anything? Anything on Facebook yet? If you have questions, just open your mic up. Why are we bringing value to the table? What do these people want? Why do they need it? Create the need. The need is the biggest word that I use in the home. I'm thinking, why do they need this? What can I possibly create for these people that they need it? So when I'm sitting in front of them, I'm going over things. I'll go over something right now that I do. She's going to kill me for using this, but I'm going to do it anyway. I use a lot of paper in the house, by the way, so I'm going to write it. So here's my drawing. Give me a second. Mr. Jones, he's, let's say 60, 62. Mrs. Jones, 60. See that? So I'll split the page to show them that they're going to end up without one. You see that? So I split the page in the house saying he's eventually going. So when he goes, I want to know, guy, so I'm here for final expense arrangements. Also wanted to see if I could help you, because I know Mrs. Jones, after doing this for 10 years, I know some of the things that my other clients run into, and I just want to make sure that you're safe and you don't run into some of these things. So you guys have a mortgage still? Yeah. How much is the mortgage monthly? That's $1,200 a month. Well, do you guys also have any car payments left? Yes. How much is that a month? That's about $600 a month. And then there's insurances and stuff like that. So, so beyond that, Mr. Jones, I just want to get an idea of what you're going to be leaving Mrs. Jones, so I understand that she might have security, and maybe we can lessen the amount you pay on this thing, on this product. So, Mr. Jones, what will you be leaving Mrs. Jones in Social Security income? So it's basically whatever you're earning today. That'll be about $2,000. So, Mrs. Jones, just to give you a fair warning, because I'm doing this so long, that most of my clients are waiting anywhere from 6 to 12 months is the worst case scenario to receive his $2,000. So just so I'm doing the right thing by you, what will you be receiving in Social Security income when you're waiting for that to come? I have $700 a month coming in. Okay, so the mortgage is 12, we got 6. I didn't get through everything. I know, guys, that you might have. But Mr. Jones, what else are you going to be leaving behind? Like, do you have existing life insurance right now? Yes, I do. Well, how much is the value to her, Mrs. Jones? What's the face amount? What are you leaving behind to her? That's $100,000. When does that term out? Here's the situation. Is automatically I know that it's either an index universal life or term. Here's why. Anything over $40,000, $40,000 and below is final expense. That's for life, okay? That's the guaranteed stuff. This stuff isn't. This is a term product. And I just replaced 3 this past week due to this, and every single one of them thought it was guaranteed for life. Every single one of them. Well, one thought it was good until age 95. Now, here's how it worked. For that particular woman, in 2 years, because they've had an 8, every 10, it jacks up. The price goes up by half. So instead of paying $60 a month, they're paying 38, about $40 a month each for $100,000. Now it jacks up to 120. So the 120 is amazing, and just to pay, because again, then annually it goes up. So they find out there's no cash value, no living benefits. So I bring living benefits, I bring cash value, I sell 2 policies to 2 people, and I get them less. So now I only got him $40,000 on his head because he had health issues. But then I also sold her $40, but they knew they were going to run into this anyway. Because down the line, they knew that, well, he's 58, she's 60, and they're going to run into this anyway. So they have to do it now while their health and age is where it's at. So you need to start selling on health and age, and providing them the information of what they have will get your policy sold. I promise you it does. Because they have no choice, and they already believe in the products. Because they hold life insurance. They have life insurance. So the power in that is through they already have it. All you need to do is replace it. We'll go over all these questions after this. These are some questions that we'll review after. So the life insurance, and then also I'm going to get back into the sale. So you know to replace products now, okay? Mr. Jones, aside from the life insurance, what else will you be leaving behind? Do you have a pension that you'll receive? I start with the word pension because it stays away from their money. And now I want to introduce, do you have a 401k or anything that should be left in death benefit? Yeah, I have a 401k. So for you newbies out there, you know what will that be leaving her behind? What's the value of that she'll receive? That's $250,000. There's your annuity sale in final expense. So for those of you, I started selling annuities in final expense many, many years ago. I wasn't even licensed to sell annuities, in fact. I started selling annuities when I was with Senior Life and Lincoln Heritage, which don't have annuity products. And I was trying to find outside resources to sell it. And then I figured, oh shit, how do you become an annuity salesman? And then I run into a brokerage. And I was just like, that was National Agents Alliance I went to. So 401k. Now I want to figure out what the value of what they can bring to the table. Okay, I know that there's 1,200. I know now. Are you taking any money from that? Is there a monthly draw from your 401k yet, guys? No, we just leave that alone. Okay, so here's the problem with your life insurance. Anything above $40,000 is, I know all the products because I'm a broker and I have to, by the license of the state, I have to understand this stuff. So anything above $40,000 has a term to it. It's somewhere down the line, it's gonna diminish itself. So what we want to check is, do you have that product here so I can just show you when it's going to end? And I just provide you this information. It's going to save you a lot of money and protect you. And maybe we can keep the policy in place. See, I even say maybe we can keep that policy in place at the premium rate you're paying for. And the reason I'm doing this is just to let them know I care. But what I care about is getting rid of the policy because that's what's right to do. So what I'm going to do is I'm going to check out the product. Now, maybe they don't have the product. Mr. and Mrs. Jones, who's that through, that life insurance? That's with Mutual of Omaha. Let's say it's AARP, because that's people which you run into. AARP, Colonial Penn, Lincoln Heritage, Senior Life, whatever is in your area you might run into, you have to learn it. There's a lot of different products out there that you're going to run into that you've never heard of. So take down their telephone numbers and put them into your phone once you do find out who they are, because you'll need them in the future. So what we want to do now is contact the company. There's no product. They don't have a policy. And say, listen, guys, you don't have a copy of the policy, and I already work with these companies anyway. So what I'm going to do is I'm going to give a call, and we're going to confirm the date that this product ends and see if we can keep this product in place. Because with this, you kind of already have what you need, unless you want more. But I'd like to figure out what's this about before I start adding premiums to your monthly budget. So I'm going to contact the company, get on the phone. This takes some time, but you have to be cool, man. You have to control this. You got to be tough. You got to control the house. Okay, get on the phone. It's going to take time. Sometimes you got to put your phone down. It has taken 10 to 15 minutes to get a hold of companies before. So you're to keep talking. And during that time of which you're going to be explaining the benefits of your product, you're going to be now bringing value. So you're using this time to wait for the carrier on the phone. Now you brought value to the table. Mr. and Mrs. Jones, I'm going to teach you a little bit about what I have here anyway. So we have a death benefit. Now, what I like to do is a little different than most final expenses carriers. I'd like to see if you qualify for some living benefits. That means if we have like $25,000 here for Mrs. Jones when you die, that you will receive these living benefits if you're alive. Meaning, if you got cancer, heart attack, or stroke, that the money's yours while you're alive, or if you can walk, talk, bathe, eat, dress, toilet, transfer yourself around, and drive a car. I always add and drive a car. That the money's yours while you're alive too, along with building a cash value savings account earning interest. And I'll tell you why that's important, because I'd like one product to be for both of you. Now I just hit them. They are just like alive. One product for both of us? I didn't know that existed. One product for both of you. And what happens there is the surprise to them is that the cash value is valued for Mr. Jones. So let's say Mrs. Jones, God forbid, in 10 years you're gone, Mr. Jones has, let's say it's $15,000 he saved up in this account. I just put big numbers down because I didn't add them up. There's $15,000 in the cash value, and he receives that at your death. You know what I mean? Because if he doesn't need the policy anymore unless he's going to leave it in place for kids. Okay, they've answered, so I'm going to call. Hi, my name's Jason. I'm a life insurance rep, and I'm helping somebody with final expense. They have a policy with you guys, but they don't have the policy here at the table. I'd like to do a policy review with you guys, and I'd like to get permission to speak on their behalf. Those words are so important. I'd like to get permission to speak on their behalf. Now, you're going to hand the phone over to Mr. and Mrs. Jones. They're going to get that permission. If somebody starts talking to them on the phone, you have to say, Mrs. Jones, please, may I have the phone? I'd like to get this settled. They will talk to you, and they won't answer the questions that I have for them, and I just don't want you to be confused. So I grabbed the phone back and said, listen, I please asked you for permission to speak on their behalf. Can you ask for that? And I literally have to hand the phone back. Hand the phone back, get permission. Now, what is this policy that they have? They'll have to do the Social Security or last four of their Social Security. You have to confirm it's them first. So what is this product that they have? Here's my writing too so far. I have death benefit. Let me see if I could focus in on this. I have death benefit. I have cancer, heart attack, and stroke. I put the cash value here. I got arrows flying up to him as if she dies, he gets the cash value. I got interest earned money. So we want to put 3% interest earned on this product, or I'm sorry, 4 to 6%. I'm using Foresters for now. Let's qualify them too. You can qualify them, guys, anytime you want. If you want to do it earlier, that's fine. Qualifying them in the beginning kind of helps you design something. I usually do a little bit after. I want to bring value first. Then I can expect them to purchase anything, because they've gone through the process with me. So I usually do a little longer. But at the end of the day, I'm still on the phone. So what is this product? I know it's probably term or an index universal life, right? It's term. So when does it term out, or when does the premium goes up? Premium goes up in 5 years. When does a policy end? A policy ends in 2-3 years. Okay, Mr. and Mrs. Jones, you heard that. I got it on speakerphone, so they're listening to this. So the value of that is them now understanding. And I will ask this. I say, well, if they decided to, and I'm going to speak to them about this, if they wanted to get out of the policy, do you need to send them any paperwork, or can I sign something on a sheet of paper and fax it in? You can fill out, especially for index universal life replacements, you can sign something that says, please cancel my policy, send me the cash value to my address, and get them to sign it at the bottom. Get the fax number, and you can fax it into the company, and they will cancel the policy. But you have to get the client to stop payment. But you only do that after you've gotten them the first policy of yours. So that's why you may have to call back and say, listen, we're going to call you back, but I'm going to get the cancellation process possibly done, and then we'll contact you back if that's what they decide. Thank you for your help. That's it. Now I have to go over with them the value that I have to bring through these policies. So I'm going to review the policy again. I will review this damn thing until it's embedded into their head. I have a $25,000 death benefit, but Mr. Jones, let me ask you a question. In the past 4 years, have you had any cancer or ever? No. In the past 4 years, have you had any heart issues, serious heart issues in the past 4 years or ever? No. Are you on blood thinner? No. Are you diabetic? No. Basically, do you smoke? No. He's fairly healthy. Do you have medication you take? I take high blood pressure medication and some other. If they take painkillers, you got to watch out for those. If they take head medication, like for mental issues, American Amicable is probably the best thing you can use for that. So what is it called? PSPD, or what the military gets. Sorry guys, I'm burned out from the week. You know what I'm talking about. They got head issues. They take a certain medication.
PTSD.
There you go. Thank you very much. So at the end of the day, you get this product, and they have the ability to use American Amicable for that. They are the ones that get you the level benefit. That's why I have you contracting with those guys. So let's go back to the board, okay? Let me stop for a second, and let me see if there are any questions up to this point. I have to review what people are writing here. So I have some things written here, guys. It says, Smart UL, what is the commission target premium and Smart Solve premium? JC lead profile expense 20 dials, 7 contacts, 5 sets. Yeah. Did somebody actually do that? That's fantastic. Okay. I found my Smart UL question. PTSD. Oh, you found out your support. Okay, got it. Yeah, it's best to just go to the carrier, guys. I don't know everything. So a lot of the questions you may have about products can be answered by the carrier. The only thing I don't ask you to do is I never want you to get an F&G illustration. If you're doing IULs and it's serious money that they're dropping in, I need you to review it with us before you do that. So remember, any questions? Let me stop here. I got to take a break anyway. Any questions? Because I want to just take a break. Any of your questions is going to help others too, guys, by the way. So your questions are valuable and they're necessary for your future. Without them, I can't understand where you're at, and I will not be able to help you. So please ask the questions.
Hey, Jason, this is Tom.
Hi, Tom. Thank you.
Hey, bud. Hey, real quick, I'm seeing, I think this is being recorded, right?
Yes.
Okay. I'm taking notes like feverishly, but I want to make sure that don't miss anything. And when you were, sometimes the focus on the paper that you were just showing was kind of got blurred.
Yeah.
So I want to make sure, I got the right things on there.
Let me drop this down up on this board then so everybody sees it. So let's review that sale. We draw a line down a piece of paper like this. I have Mr. Jones. Well, let me do it the right way. Let's say his name's Alex. Let's say her name's Ann. Alex is 62 years of age. Ann is 60. So far, what do I know about them? I'm sweating like a beast. I had this damn thing on, so I'm sorry. I actually didn't realize how hot I was getting. Alex is 62, Ann is 60. So what do I know about them so far is this. They have Social Security income, I would think. Well, they can go to 67 on that too, but 9 times out of 10 today people have Social Security income. I don't know anything else about that. I know why I'm here is for their ideas for final expense and burial coverage, cremation, things like that. What I'm going to lead into is adding more value to the sale through teaching them what they're actually going to run into. We have to be futuristic on this, but we have to be now too. The future is dealt with inflation, tax increases. Who's going to deal with that? The woman without a husband. Okay, 9 times out of 10, we go first. So she's going to deal with taxes. This is 4% annually. In 10 years, that'll be 40% more than you're paying on bread now. Gas, whatever. It's 40% more. That's insane. Okay, but that's how it is. I heard that a Super Bowl ticket in 1967 was $12. Today it's $1,200 for a bad seat. You know what I'm saying? So that's inflation at its best. So take in this, and I didn't write that just for you. I drew that so on a separate piece of paper, you're showing that. You're pointing out everything I'm drawing is for them, and you need to draw it too. Mr. and Mrs. Jones, my name's Jason. I'm here to go over some information and get you qualified for final expense life insurance. I also wanted to review some things as a state representative. I wanted to make sure that your wife is well taken care of, and make sure that I understand what you may already have. So, and I know you guys might have a mortgage too, right? Is there a mortgage here? I'll ask it like I'm stupid, and I probably know. There's probably a mortgage here. So, Alex, what is the mortgage monthly that Ann will have to continue to pay? That's $1,200 a month. How many more years are on the mortgage? They get interested in this stuff. Nobody's helping them design something, and I'm helping them design a future for the dead and for the living. So this is for another 15 years. 15 years of payments, okay, that you'll have to deal with. If he dies in 10, she'll have 5 years on. So what I like to do, sometimes I'm capable of not only getting the house paid off at the end, so I turn final expense into mortgage protection and final expense now. I can usually get that paid off for you, Ann, if your husband qualifies. I'm going to go over a couple things. Alex, do you have life insurance? Yes, I do. What's the value of that? And I draw that. What's the value of that to Ann? How much will she get? She gets $100,000. Remember, I said, now, how long is that good for? You must say that because they're $100,000. Anything above 40 is either index universal life or it's term. So at the end of the day, I know that this is term or an IUL. And if it's an IUL, the reason you can replace that, does anybody know the reason you can replace an IUL? Why would you replace an IUL? If it's just a regular payment and it comes with life insurance and cash value, why would you have to replace an IUL? Does anybody know? Say it again.
The cost of insurance as the years go by.
There you go. Cost of insurance, the COI. And we'll review both. So we have term, we know terms out. It means terminate. Mr. and Mrs. Jones, this policy, I just want to inform you that I have all the products. I've been doing this for 10 years. I'm telling you, anything over 40,000 has a termination date on it. I want to make sure that we might be able to protect you and keep that in place. So do you have a copy of that so I can just review that and make sure that this stays in place? See, I'm trying to teach them that I really care about that product, okay? And 9 times out of 10, I don't care if they do keep it or they don't, but I'll replace it, but I want to use the premium from that. So what, guys, by the way, while you're looking for that policy or we don't have a copy of the policy, that's where I have to find out who's it with. It's with AARP, or let's say it's New York Life. Anybody, whoever it's with. So anyway, I got to contact the carrier. And I remember how I reviewed that. Ring, ring. You might have to wait on the phone. Set the phone aside and review the policy that you're about to deliver, or check his health. Now, during that time is a great time to check the health, by the way. Just, how about that? Change it up, because when I'm in the house, I flow a little better than when I'm teaching. But in the home, review the health, because the health is important. At this point, we're going to review the health. Okay, ring, ring, ring. The phone's ringing. We're waiting for somebody to pick it up, because they usually don't answer quickly, believe me. They might tell you that your call wait is 15 minutes. And I'm like, you wait the 15 minutes. Get that done, or you will not replace that policy. You do the job right. Health, meds. Get the medications out. Do not miss a med. I have people that will tell you they get this box out, and 10 minutes later they pull a medication out after you qualify them for level, and then it goes down to graded because they have a puffer or something. Make sure you got meds. And if you run into COPD, remember the Transamerica level COPD. All right? So you got med. Anybody know of any other product that will take a COPD client? Anybody have anything? I think Banker's Life, is that one that does it? I don't run into it too much. But if you have something, call it out and let me know. Health, meds, and we obviously want to go over the premium, but we want to build value first. So go through these two first, and then do not do the premium yet. We're going to build value, but we're not done yet. After you get this point done, phone's still ringing. Mr. Jones, what else will you be leaving behind? What else will she receive? Do you have a pension? No. Do you have 401k? 403b? 401k? I have a 401k. That's what they said. Yes, I have a 401k. Now what do you need to do? Does anybody know where I need to go from there? What am I missing about that 401k that I need to know?
What is it value? Is it the value of the 401k, or how much it's going to pay out after taxes and everything?
That's exactly it. That's exactly it. What is the value of that 401k? And he brought a good thing in. There's taxation on that. So remember this, $250,000 is not $250,000 when she inherits it. It's 30% less than that because of deferred taxes, depending on how many years and tax bracket. But I just put 30 because it's probably 30. It's just how it is. So it could be more, it could be less. $250,000. Now here's a second. Let me put it this way. If that policy was good and they didn't want to get rid of it for some reason. Now I have run into, like Mutual of Auto House GUL, will run out of cash value. It's a UL. But I've run into ULs for Mutual of Auto that have no more cash value, but the damn thing is guaranteed. So it's a guaranteed universal life. It's so interesting to me how they keep it running, but the premiums do go up. So it's like a term. So the term aspect of it goes up. So some people may be willing. Now, remember, I'm also going to teach them how much money they put into it. Somewhere in here, I'm going to teach them that if they were paying $80 a month for that, times that by 12 months, times that by, let's say it's 15 years. I don't know how much that is. Let me do 10 years because that's easier. So that's 80. Let me do $100 because that's easier. So it's 1,200 times 10. That's $12,000, right? $12,000 in the no. Yeah, $12,000 in 10 years that they've already put in the product, and he's 62, so he might have 30 more years left of paying that product. So 30 more years on there is 20 times 4. Let's do 3, 6. Use the 36,000 in them. So what I'm going to tell them is that they owe you now. You have 36,000 in it, and they owe you what? You're out of your money. They owe you out of their money is like $64,000 of their money, but 63 of it's yours. So a lot of times it's better just to start over if they can get something similar in premium. So what you would do in that case is get them the $12,000 back, ask if they need money, and then start a policy over. That situation's unique because they would have to get close to the premium that you're used to paying. Or I could say, look, this one's $200, but at the same time, you could use $12,000, right? And then I'll get them the cash value back. But let's stick with the term. That's a little more advanced. But now we know that the 401k is 250 grand, right? Okay, so we understand that. Leave that alone. Okay, for now. For you newbies, you should be walking away, get the policy sold. If you do not sell the policy, you have a second way to get them large numbers. Because in 10 years, that'll be $500,000. My 40-year look back on annuities. It's actually a 20 on the sheet of paper, but I say 40 and then show 20. But she does receive this. So Mrs. Jones, you're going to receive that. That's good news. We're going to test the waters and see about that. Now, 9 times out of 10, they're going to tell them a story over the phone that they don't like to hear, like it's going to term out, it's going to end, the premiums are going to go up, so they're going to get rid of that product. Now, they're paying $100 a month. For them at that age now, because they've had it 10 years, it probably jumped to $200 a month. So the question is do we want to do that, or do we want to keep it at $100 and get her a guaranteed $50,000? Sometimes I get them a guaranteed $25,000. And I'll say, look, just to buy her time, because the 401k doesn't have to pay out immediately. It's not life insurance. It could take 3 months before she receives the $250,000, and she's not getting your Social Security in time. So my suggestion is, Mr. and Mrs. Jones, is that we buy her time to get to the Social Security. And then she's fine because she has the 250 grand. Or, now I'm getting more advanced where I do it. I have life insurance. Indexed annuities is what everybody should be doing today because you don't want to lose that principal. Mr. Jones, you can't afford to lose that 250 you worked so hard for. My suggestion is that you protect that 250,000 with everything you got. And you two take a look at options with me. I always tell them all the options on the table are this. This is your options today, Mr. and Mrs. Jones. So, and Mrs. Jones, it wouldn't be bad of you to have $500,000 in 10 years, would it? Would that be okay with you? Mr. Jones, it'd be okay if Mrs. Jones wasn't around, God forbid, and you had $500,000, right? So here's what I'm going to do. I'm going to do something for you. I'm going to get an illustration. I want you two to take a look at something, and it's through this company. And I'll pull out a folder. Let me see. Here, give me a second. There, I got it. I'll pull out a folder. I have a company that will double your money in about 7 years. And I'll tell you why that's so fast. Any large numbers, guys, if you have 250,000 above, it's usually a 7-year mark to the 8th year where it will double due to the bonus. Now, he can get a 15% bonus. Can anybody share with me how much 250,000 plus 15% would be? Can anybody tell me that? Because that's where he starts with. And this is big because if the premium's too high and you can't get the sale, you have a secondary weapon here. You have the 250 grand to work from. And not only that, but your numbers are going to jump through the roof getting that sale. So you provide them with this information in here. And inside here, you want to say, look, companies worth $200 billion. They are A-rated, okay? You guys need to understand what A-rated means. I want you all to teach me this shit someday. Get that smart at this stuff that you can teach me. Because if you learn the products, you're a weapon, man. Nobody can tell you anything because you know the truth. You know the facts. And it takes time to get there. But really it doesn't if you shoved your face into this stuff for a weekend. didn't come out of a room for one weekend and study the hell out of these products, there's nobody can tell you anything. One weekend would change your life forever. So 250,000. Anybody got that number? Does anybody have a calculator? I really was serious when I asked for that.
Hey Jay, it's 37,500.
37,500. Thank you very much, Rob. So we got $37,000 added on to this. Here's the bonus. Wait, what did I do here? 500. Okay, here's our new number. This is added on. Here's their new number. 87,500. It's 287,500. 287,500. 287,500. 287,500. $37,500 is yours today, Mr. Jones. Plus, if that policy was an IUL, by the way, and you were able to get the cash value out of it, you could add that to the $250,000, jumping the bonus. They got one shot at the bonus. I always ask people, if they're serious about doing this, if they have money in the bank, if they have a way to pull off more cash, to dump it in, take advantage of the bonus, and then distribute it back into the bank account if you wish, because you're allowed what? 10% annually. Free. You take 10%. So he's able to touch now $28,750, and it'll be close to that for the rest of his life if the balance of the index was 8% annually. So about 8% to 10%, even 12% on times, he'd be able to be, let's say it's 20 grand a year for the rest of his life. So not only did you add an extra income, but later on, and can live on, this will be $500,000 in 7 years because of the bonus. 7 years. They doubled their money. How the fuck could you not do that? You know what I mean? Excuse my language, but that's just sick to me for the people that say no. And let me tell you what you're going to have to get around. You're going to have to get around a stockbroker. Your stockbroker has fees. You're going to have to pay 30% in taxes when your wife inherits this. So let's take our $250,000 and it's in the market. Well, Mr. Jones, the scariest point about your 250 grand is this, is that overnight you could lose your money. And you could also lose half of it. You could lose 30%, 20%. If you went down $50,000, you don't have enough lifetime to get it back. You don't know what your stockbroker is actually playing with your money in. You don't realize the numerous amounts of companies that he chooses, that half are no good and half are making you some money on each one. So the distribution's through everything instead of just one place, where you let a $200 billion company use the best stockbrokers in the world to advise you and your money. And you never participate in the downsides. You only participate in the upsides. And we turn it into life insurance so your wife inherits all the money in a death benefit, along with her income shooting through the roof and your two incomes shooting through the roof, of which is $20,000 a year now, which is about what? Almost $800 a month now, to almost $3,000 a month because of your lifeline. Because a lifeline shorter in 10 years is 70, we can jump the number because they had $500,000 and they can use $4,000 for the rest of their life. Deflecting inflation. Remember, guys, Mr. and Mrs. Jones, the two things I need to do is make sure that both of you are taken care of, but make sure that the finances are right for one of you when the end comes. So we want to also, lastly, we want to protect the principal. If you just protect the principal, Mr. Jones, you'd be doing yourself a huge favor, because in your eyes, 250,000 is a great number, right? And at this point, you're not really seeing any huge jumps in the numbers. But if you can take advantage of something that in just 7 years is proven through the illustration to get you to $500,000, I would hope that you'd at least take a look at it. So what I'm going to do now, do you guys have a printer? Do you have a computer and printer? Yes, we do. I'm going to use that computer, please, and I'm going to print this illustration up so you two can think about this opportunity and make sure that we protect your principal. No more downside markets, no more stockbroker fees. We get you an indexed annuity. Mrs. Jones won't lose 30%. Very important. And that you two have the option to a larger income. Plus, we make you $37,500. Instantly, you make $37,500. They give you a bonus. Why do they do that, Jason? They give you a bonus. A lot of companies will give you a bonus to attract your business, okay? They're making so much money that they can give you that money. That's unbelievable, right? They give you that amount of money because they're making so much money that you will be a part of, okay? So you're no longer in the stock market. You're on the outside looking in. You're mirroring the market. So you're mirroring the market, but you're outside of the market doing so. So you're funded based upon Athene or F&G, their account. You know, whichever one you decide to use, but this one's a bonus. And older people, I always give the bonus to. They like that. That attracts them for the sale. Instant money, instant gratification. So do you guys have anything? Look, how about this? We can pay your house off in what? Here's $37,000. You told me that there's what? It's $1,200. Let's say there's $150,000 on your house owed. So if we earn this in about 2 or 3 years, you'll be able to pay your house off if you chose to. But if you let the money go, you can just take the mortgage payments from this and keep the mortgage payments in your pocket now. See, all these little details that I add to them is all the value. I've thought of everything that they could do with the money. And the last thing somebody can do is deny me that I'm right. But what they don't do, they may not believe the product. They've been with something so long. So what you're going to have to deflect as a representative of insurance products is change. Because they're so damn comfortable with the way it is, doing something new at older ages is tough for them to come to the reality of, so you have to coach them into change. And that means that Mr. and Mrs. Jones, I'm telling you, listen, the last thing I'm here to do is hurt you. I am here to represent options for you that protect you. That's why I have life insurance. What do you think life insurance was created for? It was created for protection from your debts, from the debt of a funeral, from the loss of a home, loss of vehicles, sending kids to college, making sure your wife's eating every day. Because when you're not around, Alex, the future is still hers. She has to deal with 4% interest in inflation. She has to deal with the tax increases. She has to deal with Trump's wall and the government shutting down and the stock market plummeting. Right now is a great time for annuities because the next dump is coming. The next downside market volatility at its best is coming. It's time for you to start presenting options for annuities so you protect people's principal. If you just protect the principal, you're doing them a hell of a favor across the board. But if you can add some money to them, so be it. You're giving them 15%. Remember, that 15% is only good for people 65 and below, or I should say 64, because 65 and above is, what the hell is it now, 13%? I think. It went from 8 to 13, I think. It's either 8 or 12 at Athene. But I do know that 64 and below is 15%. So what does that do for somebody with $1 million? That adds $150,000 to their bucket. Now, you're going to tell me that somebody that's up and down in the market like that has to participate in the downsides, Mr. Jones. You're wishing for the upsides. You're not putting money into it anymore, and you're not being matched. You need to protect the principal, sir, because across the board, you're somewhere in here. You're actually earning, with the ups and downs, as you see, 15% increases, but you also see 15% downsides. Well, I don't see too many downsides. Well, you're not seeing too many upsides either. So I'd like to get you the upsides with no more downsides. I know that you may be okay with the number you have, but the question is, if you lose money right now for her, is she okay? And she's not, because if you died tomorrow, her lifeline's 30, 40 years from now. It's not enough money. It's only $25,000 for 10 years. That's it. With inflation going up and her living basically on this, well, she could sell the car. Well, sure, go ahead and sell the car, but it only takes 6 months. You know what I mean? You just died. You think she's going to focus on a car? You have to get around the objections too, okay? And you have to hit them immediately. Do not sit there and wait to come out with an objection. Grab it, hit it fast, okay? And do not play with objections. Show him you are serious about this situation. Because when they're clowning around, you're serious because that's your time. They asked you for time, they're going to respect it like a doctor's office, right? Their home becomes my office. Nothing less. So that's one scenario. You had a lot going on there. That was Forrester's. Let's just do final expense. Same thing applies. I want to know what life insurance is. So does anybody have a scenario that they've been in that they need help with, or that they're going into that they may need help with? If you need help with anything, just ask, and I'd be more than happy to help you guys out. Does anybody actually have anything that you want to try something with me? Do you have any objections that you're dealing with that you don't understand how to handle? If you have, write down an objection that you run into and either post it or yell it out. And I want to see what you come up with on an objectional side. Give me a sec. Let me change this real quick. Think of an objection that you can come up with that will help you in the home. You're going to make me do it, right? You're going to make me come up with the objections, right? I want to think about it. This is a tough one. We want to think about it. Let me review something with you guys. This goes back to a review. I'm going to review all the options again. So, again, you have, I'm going to go over what they have. So you guys have a mortgage, it's $1,200, and you'll be left with $700. It's best to go with what she has left over, even in final expense sales. So if you're starting to make a sale and they got to think about it, you want to share with them that there are going to be left behind. This is not if, it's when. So you got $700 left behind. You're going to wait about 12 months, 6 to 12 months. I'll say 12 first, and then I'll add 6. You're going to wait 12 to 6 months for, or say 6 to 12 months, actually. It sounds better because you end with the 12. You're going to wait 6 to 12 months, and then that goes more for his $2,500. And, God forbid that the economy changes or the government never gives us Social Security again because they take it all. But let's just suggest that you're going to get that. He has the 401k that he can leave behind you. That's 30% less. So I gave you the illustration with proof. If you were with them for the last 20 years, you'd be at $1 million today. That's factual proof that I showed you on that illustration. Remember, I printed out the illustration. You don't have the $100,000 policy because that terms out. So basically, you're wishing upon the $2,500 that you're not going to have for 6 and 12 months. I'm talking to you to, this is how it is, Mr. and Mrs. Jones. I'm not trying to sound cocky, but what I am doing is I'm making sure you and are protected. I'm sick of seeing women struggle and losing homes out there. You two have no idea what it's like when he's gone. You haven't experienced that yet. And it's horrible for you, Ann. It's not good. Mr. Jones, it's also not good when she's gone, and that 700's a difference in your economics. And inflation is still climbing, guys. Inflation is still climbing. We still deal with tax increases, but one of the incomes is gone. So the only thing it tells me is maybe you don't trust me or you don't trust the products, and I'm licensed through the state. Maybe you want to carry a copy of your license from the state. You can also make badges up with your face and some of the carriers that you honor and respect, or the name of Advantage One on it, and you can share that tag with them, or show them a copy of. Carry it around with you in a 3-ring binder. You should have a bag with it with a lot of things in it, like prescription drug checks per application, or per carrier, and that bag has to be filled with a lot of things, apps. Your car also has to be done properly. Your car is your second office to your home. So your car should match your home. Or truck, or minivan, whatever. In fact, go buy a minivan. Make it into a mini office. I want to think about it. So again, we reviewed all this. What my fear is that his health may change and that we don't qualify him for what he qualifies today. Now, the annuity, here's what I end with. If they really don't want, and they really want to think about it, you end with this. What I'd like to do is I have one more option I'd like to share with you too. I'd like to go print that out at my office, and I'd like to be able to share that with you while you're thinking about it, and then I can come back and maybe we can talk about this again and maneuver the numbers again, and I'll have something new for you. What date would work good? Can I come see you guys maybe on Friday at noon? Does that work for both of you? See, what I'm doing is I'm setting an appointment and I'm getting back in there. I don't care what situation and final expense you run into. If they have to think about it, you tell them, I have a better idea for you, but I need to get to my office. I have a fantastic idea that I want to present to you. Maybe it's a different product. Maybe even if they don't qualify for it, just get back in the house, okay? Find a way to get back through this door, because that's the only chance you have to get back in is setting the appointment right there. I'm going to tell you something. 9 times out of 10, when you walk out of a house, you're done. You're usually done. So you got to press it for everything it's worth, okay? And I have changed people's minds. And I'll tell you how I do it. I'll wear them out. It's me against them, and I would wear them out, all right? Let me see some of these questions here, guys, if there's any. Okay, give me some questions, guys. Can somebody give me some questions on some things? It can be about anything. How do you get started? Like anything. Let's talk. Let's have an open discussion, please.
A few minutes ago, you were talking about COPD besides Transamerica,
Yeah.
and it looks like Liberty Bankers Life
Oh,
is standard.
really? That's great. Okay.
And Assurity, I don't know too much about that.
And COPD, is you sure about that? That's true, really?
Yeah, that's well, I had some that's a cheat sheet, and it seems to be trustworthy so far.
Do we have Liberty Bankers as an option in our list at Assurance Bay?
I'm not sure. I think I saw Assurity, ASSURITY.
So these two will accept COPD. Now, what we need to do is just check. I'm going to have to check the differences, or somebody check the differences, and obviously what they pay and stuff like that. Maybe it's higher than trans even. So that, but here's the good news: is the reason I say that is because some people can't get trans, and I'm like, when we run into reps that you hire who can't get certain products because of background checks or whatever, you need to find something they can get into. So you need to ask me or Chris what the hell they can get into when you start hiring. And I would really advise that some of you, like Rob, you got Tom, who else do we have? Who else is on here anyway? Allie, Faith, somebody else there. that when you should start really looking for some, get good at the products and get good at what you're doing. Make some money, bring some proof to the table. But if you know anybody out there struggling, bring them to the business that really is designed to help reps achieve their goals. See, I ask you for questions because I can't develop everything that you may be experiencing when you're out there. So when you're out there, I would love to know what you may be running into. Sam Chan called me yesterday. He calls me for advice because he's getting into mortgage protection too. And he asked me, Jay, I'm having trouble because I'm running into guys with health issues. A man with health issues a lot. He said a lot too. And he says, I can't qualify him for anything that's that large. Like I can't pay the mortgage off for him. I said, Sam, well, first of all, 9 times out of 10, you're not there to pay the mortgage off anyway. You're there to pay the back end of the mortgage off, what's left on it, from 15 years to the 30-year, or you're there on the front end to buy time. Those are the two things mortgage protection truly does in a sale. Buys time for what? Does anybody know what it buys time for? What do you buy time for?
To save the equity in the house.
Protect the equity and sell the home, right? Sell the home for the equity inside it, which under many stipulations, this man is going to have Social Security unless he's young. Now, does anybody know the age of when women or man can collect Social Security? Let's say they're younger. So let's say, he's 60 and she's 58. When can she start collecting Social Security if he would die? Don't use your Google. I'm just kidding. Anybody know? It's age 60. So at age 60, she can start collecting. So if he died now, she'd have to wait for that Social Security. You got to remember that. That's a high selling point. That's a void in money. So a lot of people believe that they get the income immediately. So many people believe that they get both Social Securities. You wouldn't believe how powerful using Social Security on people is. It's extremely strong. It brings so much value to your sale using Social Security as your weapon. You're selling it for the equity, buying them time for the equity. Somebody have a question? 15 to 30-year back end. In between here, it pays off the house, along with living benefits and so on and so on. So he says a man can't get health and he didn't want to know what to do, he can't pay it off. I also brought in the fact that she's going to wait 6 to 12 months for the Social Security. Now, he had mentioned, because he had watched my other videos, that I had mentioned that he could put a policy on the woman. Here's another strategy you need to learn. Why would I put the policy on the woman? Does anybody know why I would? And she's totally healthy. Why would I put a high interest earning policy on a woman? F&G, IUL, 8.7, 9.7 annual interest earnings, okay, over a 10-year spot, over 10 years. That's the average interest earned on an IUL. Now that IUL will do something special for them. It will put away cash value for them at the time of death. So they got the money. This is where they start seeing value in something that goes on the woman and protects her as an annuity at the end. Now she gets the big money. She can pull it all at once, or she can annuitize it and pull it on a monthly basis, $100, $200, $1,000 a month, whatever she needs. So she can pull this tax-free. It's annuitized tax-free. This is called tax-free retirement. And if you want to learn a lot about that, you can look into Patrick Kelly's Tax-Free Retirement book is a great one. I'm going to tell you something. Patrick Kelly's Tax-Free Retirement book, if I were you, and I'm going to do it again, and you can actually maybe call the corporation where they have the books, get them in bulk cheaply, Amazon, things like that, but buy bulk of them. And when you deliver, when you're out in the field and you run into annuities, when you're reading the book, highlight some areas in the book. You leave the book behind when you're doing annuities. That'll guarantee you got to come back. You got to pick your book up. So it's a way for you to get back in the house and discuss this again. These are all tricks and trades, guys, that you're going to have to learn even in final expense. But to review final expense again, real quickly, we recommend people using Royal Neighbors because of the liberality of it, and for new reps, it becomes a simpler way to write the policy. Now, when you become more advanced, you can actually move into Mutual of Omaha. They got the GUL and the GUL Express, which a lot of people don't use because they only use Living Promise, but they don't understand that product. So we use this more than we use the Living Promise. And then you have the Forrester's Plan Right. So the only thing I need you to do is check between Forrester's Plan Right, Mutual of Omaha, and Royal Neighbors premiums. But you've got to understand, you can't say, oh, I'm going to use this because somebody at age 50 is cheaper with Mutual of Omaha. But you've got to understand that there's questions that you need to ask. There's medications that they're on. And what does it matter if you get more premium? That's why I tell people really to use the policies with a higher premium. You'll become an expert at selling final expense, because if you can sell that, you can sell anything. So the fear is that they might be replaced on premium, and that might be the case. So in some cases, I just want you to do what's right for the client. But at the end of the day, and for yourself, but if you do what's right for the client, you're always going to make money. I don't even know how long we've been doing this, guys, and I'm glad to see you all are here. It feels like it's been a couple minutes for me, but I know it's probably been a long ride for you. I really would like to, I'm going to sit down with you and just talk and just go over some things with you. Let's see. So, how many people we got new on here? We got a couple people on here that are new. Does anybody, are you guys, like Rob, are you selling, what's your go-to product, Rob, when it comes to final expense? Faith, I'd like to know yours too, bud.
Most of the people I've been sitting with probably been 70 and over. So they've been hitting Mutual of Omaha, Living Promise.
Got it. And see, the Mutual of Omaha product is fantastic for him to get that job done. And I don't know if he could have, maybe he could have used Plan Right, maybe he could have used the Royal Neighbors, but if he's getting a job done, he's getting a job done. There will be your go-to carrier. And Mutual of Omaha, 9 times out of 10, is that go-to carrier. I only suggest these ones because if you're new, that the liberality of that is a great product. And a lot of guys do use Mutual of Omaha, but on the flip side, I understand a lot use that too. But I didn't understand, the reason people don't use that particular product is because they don't understand it and they haven't learned it yet. But once I started studying it, I said, oh, wow, this does have power. The member benefits that come with it and stuff, it's just fantastic. And it kind of brings more value than Mutual of Omaha through the member benefits. So you may want to check that out by the fact that it can bring more value through the member benefits portion, and it gets more people through if you're new. That's a great way to start. The Faith, what do you use most? Don't even say North American either, which I know you use. But do you use, what do you like too? Do you use Mutual of Omaha? Do you use Royal Neighbors? Do you use Plan Right? If she's listening. Let's see here. Anybody else want to tell us what you use, what your go-to is?
A lot of this sits is my demographics too. People just looking for a $5,000 policy and they're on Social Security on the minimum. So I know it may answer the phone, so I know it's going to get replaced if I don't get it on price when they're that small of a policy.
Sure.
So if
Right.
we're somebody younger, if I was hitting somebody around 60 and they seem healthy, I think it's a great idea to do a UL.
Yeah, sure, right. And the reason, I also suggest the UL at that late age is because the cost of insurance will probably be deflected at the time. It'll probably get them to death. But you also want to remind people that, due to the cash value portion of it and him surviving, if it's on him, they can overfund that product, and it'll allow them not only to build a nice nest egg for Mr. Jones or both of them at death, because at mortgage protection, you're trying to pay off the mortgage plus leave a nest egg. I tell them it's another retirement plan after you pay off the mortgage if they're young. So even with return of premium, but return of premium has to be 50 and below, which is tough in our area. Doesn't happen, in Florida. So it's very valuable to know your options and just limit your options too, though. That's why you got to find your go-to product. And the go-to product is usually the one that you see that the premiums are least on. But remind yourself when you walk into a situation where the health gets involved and Mutual of Omaha doesn't accept it, that you have backing. You can fall back on something. And it might be something small, like a medication that Royal Neighbors may take or foresters may take. And maybe they want those living benefits too, or member benefits. Maybe there's a reason that you can sell them on the member benefits of Royal Neighbors, foresters, and things like that. So I love foresters, to be honest with you. I mean, don't get me wrong, I love Mutual of Omaha, but I use it on the GUL side more than I do on the Living Promise side because of all mortgage protection, So it's that's just how it goes. But what else can we talk about? Is that it? Do you think we've hit it all, or is there anything else I can help with? Tom, you're new, so what do you have for me today? You had a lot of questions yesterday, but that was more about the platform and what have you. Do you when you get in the field, well, let's start with Tom. Hey, Rob, Tom is new, so Rob's great. Rob started like you. He's in Florida too. And I had to take Rob out and kind of help him out on some things. And it took him a while, but he's on board. And he had figured out that his last company failed him horribly. And unfortunately, they didn't do it right. They sent him like 60 leads, mortgage protection, put him at a low comp level, never trained him, and sent him out. So he knew of me, called me up. I went out with him. We helped him just recover some money and tried to help him as much as we could. But now he got back in the game. So I'd like you two to talk. And Rob and Tom just met me. And Tom, where are you from too? Lakeland?
Lakeland. Mm-hmm.
Okay. Rob, Tom's from Lakeland, and he's not new. He's in health insurance, and it's burning him out, and he's getting fried. But he's an excellent sales representative. I know that. He just needs some product knowledge. But Rob was new, and he had some struggles, and we all do, but he went through them like a soldier. He never complained about one thing. I never seen the guy unhappy. It's unbelievable, and it's just a pleasure to be around too. And he's really a great part of the team. And I'd like you two to talk one day because of where he came from and his mentality to say he can do this business because he tried to go get a job again. And he knew that this was still there. He knows he's a licensed rep. He didn't want that job. He wanted to do this. And now his wife's involved. When he got his wife involved, that changed everything. Rob, can you have any advice for a newbie? That's not newbie, but new to us.
Sure, absolutely. It's not an easy business, but a lot of what you say is you got to stick with it. Eventually, the numbers tell you, and you need a good lead source and weekly leads coming in.
Yeah.
And the people will drive you crazy. Buyers are liars. But keep on pushing forward and keep on keeping they call it key performance indicators, making sure you get your dials, your contacts, your sets. Making sure, final expense
try to set like 20 appointments a week, so you have plenty of people to see. And then in between that, I work the Lakeland area also, so I'm in Brandon, so you're not too far from me, Tom, and you always got to keep working. There's no not too much downtime.
Right, right. I'm definitely used to working. I'm doing health insurance. Well, I was doing health insurance and I'm doing 12 plus hours a day.
So with this, if he holds that kind of standard with the numbers he can be paid through this, Rob, he's going to do fantastic. But another thing he said is he doesn't want to work all those hours. And the great thing about it is once you get good at this, you're going to work 3-4 days a week. You're going to pull 5-10 grand in, and you'll be, you'll have all time in the world with your wife, your kids, whatever. But if let me tell you the difference between 300,000 or even 200,000 and 300,000 a year is that extra Friday and that extra Saturday. So this year you find out, because you're new and you're still establishing value for clients through products, that you only hit 100 grand. That was because you didn't add Friday and Saturday in, and you would have been 200 grand, because those are the missing pieces to the puzzle of people earning more. And if we were at a job working for somebody, we'd be forced to be there on Friday. But we, as entrepreneurs, we do work hard 4 days a week. Don't get it wrong. And there's a lot of paperwork to handle too. So it's wise of you to take the days off so you don't get fried. Accept the numbers. But if you can delegate work out to a wife, a partner, something like that, you have more time as the sales representative of your company and the business builder to education, lead flow, and getting out there a little more. You know what I mean? Now, half a day could be used on Friday. That half a day could be 2 clients and $2,000-$3,000 in sales, or even $5,000-$10,000. You never know, And adding that up by a month, that could be the change that you need for an extra $10,000 a month, which makes another 100 grand a year. So I was going to try it, but man, Florida is tough, guys. It's like you talk so much in the house. These people are just so impossible sometimes that you get so burned out from them. But you're really, truly selling. You know what I mean? That's mortgage protection, though. You cut and dry final expense. If you just go into the damn house and is anybody on here selling final expense right now? Anybody just selling final expense? What, Rob? What'd you say, Rob?
Yeah, that's most of my business right now, final expense.
So is that what you're getting as final expense leads then, okay?
Yeah, I mean, I have some B leads, mortgage protection, but I have to make some contacts.
Okay, so what I suggest Tom does is, Tom, when you get your A lead batch, you're going to start with tele leads. You're also going to have your order in for direct mail. Have you contacted Chris yet?
Yeah, I texted him this morning. I thought I did it yesterday, but I looked at my my text. I guess I must have punched one number wrong. So
very important.
This morning.
Okay, great. Now I want you to get a hold of him any way, shape, or form. Call him, and I will call him too to let him know to contact you, because the guy he spoke to yesterday that I just hired from Senior Life, his first 2 years, the guy did over $400,000 in Senior Life. So Chris did me a favor to bring this guy over who's a heavy hitter. He's going to get him his leads. He's going to set him up. I need you to sell Chris on who you are, okay? I want him to help you get started in the business, okay? And he has the power to get you leads. So just enforce your situation. You're a power salesman, and you got some numbers to bring. Unfortunately, we don't have numbers to prove through life insurance unless you do somewhere. But if you don't, let them know the numbers that you did at Senior Life, because you were at Senior Life, right?
Yeah.
But it's interesting that the other guy was at Senior Life too. So let them know your numbers at Senior Life. If you did 6 figures, let them know.
Mm-hmm.
Just tell them you're from Senior Life, in fact. Okay?
Okay.
So, yeah, when you order your leads, you're going to start. You got the tele lead. That'll get you started. That's the start point. the direct mail lead would be second. I don't know, Rob, do you use direct mail?
Yes, I get. Right now, no.
I couldn't hear you. You froze up.
Yeah. Now right now, I have to get a direct mail order in.
Okay. And
It's
direct,
relevant right now.
and get the B leads. You know, and then Tom, what you'll do later is you can start with throwing some B leads of mortgage protection in. And Tom, by the way, I wanted to ask you if you had free time anytime next week, so me, you, and your wife and my wife could get together. If you could talk to your wife about that, that'd be good. Because I usually help people sell them on their wives, like Rob got his wife involved. I'm not going to sell her on it. I'm just going to tell her how much easier your life would be.
Right.
Because the couples, man, it's just powerful. It's just so powerful for that to be a part of your life. Any other questions, guys? We had a long stretch here. You know, as you go through this, feel free to invite new reps to this on Saturday. If you find a new rep to bring value to the table, I'm going to tell you how to get a rep, okay? Let me finish up with this, and then we'll get the hell out of here. When you get a rep, and you get it's a prospect, is what it is. All people that we talk to start out as prospects, even your clients, leads. When you get a rep, and you want to do, again, value. So even selling people on the value. And I'll tell you why you guys are going to want to start getting reps. Because what I have now is I got a few reps that the one guy brings me $3,000 a month in. I'm not worried. Like I could survive. Like most people would be very happy with that number, you know. We're not as life insurance reps. But what that does is that helps my lead flow, gas in my car, things like that, you know. That's a nice number to have, but that's not it. So you get another rep bringing in $1,000 a month. Or sometimes it's a week. That can happen weekly too, guys. So that's not it, but we could go over, you know, the fact is I just want you guys to find quality so your less money is out of your pocket is all I'm trying to say. I just would like you guys to find. Now, Tom, it's not time for you to do that yet, but Rob, Faith, anybody else on here could start finding reps and bringing them onto the team because I think you guys can coach now too. You could coach, you could definitely smarter than a lot of people out there, that's for sure. But you always have this. And remember, guys, when is our training? Now, Rob, I'll need you to write this down because this will be training, and everybody write this down. If you want access to this, you got to text me join. Monday, 11 a.m., final expense. All of you, put this into your schedule, please. You would not believe the information you get from these. It's so awesome. Tuesday, 11 a.m., mortgage protection. The highest selling talks nationally. I talked to hundreds of people the other day because I was the top guy last week. Over $10,000 I did, and I did it with like 4 clients, and I also hit $350,000 in annuity illustrations. I haven't sold them yet. Wednesday, IUL and annuity training. This guy knows his shit about the products. He really, really knows these products, and he knows how they adjust in the market and stuff. It's fantastic. 8:30 a.m. Saturdays is Alyssa appointment setting live. She is sick right now, guys. That's why it didn't go on. Tom, you know she was at the urgent care yesterday. And in fact, I can't breathe, and I got a sore throat due to this chick now because I'm going to kill her for giving me this. We got 10 a.m. as me. Live. Anything goes. And I would prefer it be requests. So if you request during the week something, you need me to go over something during the week, please go ahead and do that. Any other questions by anybody? We don't have any more questions. I really am impressed by all of you today, staying on here for almost 2 hours.
Yeah.
That's very
good,
impressive.
Jay.
Okay.
You did good.
Thank you very much. Tom, any questions?
The thing that was pretty impressive with the 15%.
Oh, yeah, and remember that? And that's how you get the people excited about their money. Faith, any questions? Or Ali, any questions?
Yeah, can you elaborate on the income annuity?
Which part of it?
I don't know. This is something new to me, so.
Oh, okay, well, yeah, sure. Hey, listen, if anybody wants to get off, I can stay on with him, but if you got to go, but I can elaborate on this annuity. That annuity is called a theme. That is called the Performance Pro Elite 15 is what I was going over. There is a 10 and there is a 15, 10 and 15. The 10 is a 13% bonus. I believe it's either 12 or 13. Faith, you know what it is? Unmute your mic, Faith, if you can tell me. 15% bonus on the 15. So what this means, a Theme Performance Pro Elite 10 and 15. Write it down. What that means is this, is if somebody has a 401k, a 403b, a savings account, anything that has money, they can already have an annuity too. Guys, you know that you can replace annuities, all right? You find annuities is one of the questions you should ask, by the way. When I'm asking, do they have a 401k, I missed this the other day. I didn't ask if he had an annuity. And he just, sometimes they only answer you for what you're giving. So I said that later, I said, do you have an annuity product? And they said, yes. And I find out it's earning 1.7%, 1.7 fixed annually, garbage, okay? Rob, can you mute out, buddy? Rob, can you mute out? Thanks. So any of these, anyway, let's go back to here. You got money. You find somebody that has one of those products or money. You take $100,000 of this. In the 401k market or any stock-based product, it is up and down. Okay? They're up and down. They could lose money. They don't have enough lifetime yet to get it all back. They could lose it. Very important that they don't lose any more money in the later years. So that's called principal. You are to, the two P's are protect principal. Protect principal, P and P, okay? So along with this, the annuity adds a bonus. The bonus up front is 15% for somebody below age 64. 65 and above is 13%. 15% is added to that. That means that they gain $15,000 for joining that company. Does that help you, Ali? You want more?
Yeah, definitely. Thank you, buddy.
Now they're at $115,000. Now the company shows a look back. You get an illustration from the company. You guys need to call a theme to do this. Got to ask them. I have a 62-year-old male. He has $100,000. They might ask, is it non-qualified or qualified? Everybody write that down. Qualified and non-qualified funds. And make sure you go learn what the hell that means. Because qualified is a taxable. Rob, what the hell is qualified and non-qualified? I just drew a blank. Qualified, non-qualified. There's different funds in qualified. They could be the 401k, they could be this. There's other funds over here that are like cash or they all don't, I don't know if they go together. I actually forget, to be honest with you. I need to do myself a reminder. Let me tell you something. Qualified, non-qualified has been one of the most confusing things I go through when it comes to annuities, and it's simple. So don't think it's confusing just because I forget it. It's just something, I don't know why my brain doesn't click with it. They get $115,000 Ali now. The annual interest is 8% over 10 years. That's been proven for 20 years. Now let me tell you what this company did. You don't think they're making money? You know that they recently just jumped those bonuses. At age 64, the bonus was 13%. At age 65 and above and below here, this was 8%. Now they jumped this to 13% and this to 15%. That's how much money Athene is making now. They're jumping the bonuses now. This is a fantastic time to get into business because they're smart enough to know the market crash is coming. They know that people are going to load their money in. It's your job to find the people that need our help to protect what?
The principal.
Right.
The principal.
No downsides. Only participate in the upsides. When you pull the money on a monthly basis, you pay less in taxes than you would at a 401k market-based product. You also do not have any fees to a stockbroker or stock brokerage fees. Two separate things. Adjustment fees. Learn how the adjustments work in the stockbrokers, and their adjustments are sometimes 10 to 30 bucks just to move something around. So this is money that they don't see disappearing. Along with the fact is if they lose the money, they're doomed. If they're 62 years of age and he were to lose $50,000, he doesn't have enough lifetime to even make that back. I bet in the market he's in. Because why? Because he's going up, down, up, down, up, down. So now he's probably stagnant at 200 grand. So that's why we want to protect principal. All right? Do you have any other questions about this annuity?
Yeah, what I meant is a lifetime guaranteed income annuity, which is if they put 100,000 and they went through it and they're still alive, the insurance company will keep giving them until they're dead or
That's right.
whatever.
That's right. If they make that agreement, they will get that lifetime income for the rest of their lives. But 9 times out of 10, that money's never washed out because they only choose a number that they know fits into their timeline that is based upon the money that they have in there. So the worst case scenario is, yes, that they have to pay that, but they know what the hell they're doing. It's their money that they're using. But what we try to do is teach them to leave something behind while drawing cash. So we want them to leave, 9 times out of 10, most people want to leave a nest egg behind. So if they're using $1,000 a month, we try to leave them, we try to tell them, why don't you just live on 8 or 10% a year? You know, add the income. While these two are alive, he has $2,000 coming in, she has $1,200. Maybe she has a pension for $2,000. You know, that's $5,200 a month. That person doesn't need to draw. They're fine. 9 times out of 10, these people get older, they don't. He has $1,000. She has $750. They have no other pension besides the 401k. They need money. They need $1,000 a month. This is the person you try to teach to leave her money though. So you want them to minimize the draw. And they need to learn that. Now they can increase the draw, but most people only want to touch the 10% annually that they're allowed. To be honest with you, they have the option between turning the 10%, they can just take 10% anytime they want. That means leave it alone. And by the way, they have to choose this up front. 9 times out of 10. They have to choose whether they want to turn the fountain on or just take 10%. So that's something you guys need to weigh out. But most people just want to take the 10%. What he's saying is that they would get $1,000 for the rest of their life, and if they outlive the money, that 100K is gone, that this company still owes them $1,000 a month. That's a true statement. They do owe them $1,000 a month for the rest of their lives. Any questions on Facebook? Any questions on Facebook? Okay, any more? Ali, anything else?
No, that's good, appreciate it.
All right. So what is most important is that you guys learn the products. Once you learn the products, the presentation comes down to just showing them. Remember this word, please, and write it down. That's the simplest way you can explain something to people is through that. That is how scared are you with that word? You're giving me options? Thank you. You know? So that's not intimidating. So use that word in the house. But be tough. You got to be tough, guys. You can't be a wimp. I'm telling you, you got to be tough. These people roll all over you if you don't be tough. You know how many hums I've been throwing out? I mean, literally, I've been throwing out so many hums. I don't know, maybe like 4 or 5 in my career. It's a long career. But I had a guy tell me he would leave me in a pool of blood the other day. A pool of blood, he told me. And all I was trying to do was do what I did here. But he was one of them guys that didn't like me prying. What? Just tell me the number of what the fucking mortgage protection is, he said. Whoa. Like, first of all, kick your ass. You know what I mean? Second of all, don't talk to me that way. And then it starts like that, and then I got to cool down. I walked out the door, and that was it. He followed me all the way to my car. He says, I'll leave me on a pole. And I just had to walk away because you'll lose your license. Cops will come. Don't play with these people. But be aware that those people were out there, okay? It's a very unstable market when it comes to their head. But don't deter from the way you sell. That was one out of thousands that I've sold, okay? All right, last time, any questions? Everybody's good? Okay, please do me a favor. Go study your products, learn some objections, get your scripts down. If you're new, we got to get you scripts. We got to get you signed up. You'll have everything in the back office. It's loaded with sales tools, videos, scripts. All you do is click on them. Click. Watch videos. You can click the sales tools, PDF them out. It's awesome, our back office. Text me, join if you want to become part of the #1 lead system in the country today because we own the lead houses and the training events that we host, okay? Thank you all for being here. I appreciate it. I'll see you next week at 10 a.m. Thanks.
Thanks, Dave.
Yes, sir.